name is Helen Zhu. I'm head of China equities at BlackRock. At the moment, we're seeing a still fairly robust global economic backdrop. 2017 was obviously a phenomenal year with synchronized global growth. This year, we do see some degree of deceleration from Europe as well as Japan, but the US and China, which are the global super engines of growth, are still both in a very good place. And from a China perspective, the data continues to be very robust. We are seeing still high single-digit electricity generation data, for example, which tells you that things can't be that bad on the ground. There's a little bit of deceleration in terms of consumption, but some of that may be from temporary seasonal effects. So broadly speaking, I would say the global economy is still in a very decent place. Looking ahead, I think there are two major issues to keep monitoring in the second half of this year. The first one is obviously the US-China trade relationship. There's been a lot of ups and downs and volatility on this front. Certainly, as the two major economic superpowers of the world, if there are significant frictions between the two, that could potentially destabilize global growth and potentially challenge China's manufacturing upgrade ambitions over the medium term. On the second issue, I think that the markets are watching very closely the Chinese policymakers' domestic policies. So, for example, how hawkish will they be towards the pace of financial as well as corporate deleveraging? Will that potentially derail growth and destabilize employment against the backdrop of uncertain global trade outlook? Our view is that the policymakers will be fairly practical about the pace of deleveraging and actually adjust that pace accordingly based on what they see from the fundamental economy as well as global demand.